Let me give you an illustration for section 234B and 234C interest. Illustration. Asset is X. Previous year 1920. Assessment year 2021. Tax on total income. Rupees 10 lakhs. To what extent it is covered by TDS? To the extent of rupees 3 lakhs. To what extent it is covered by TCS? To the extent of rupees 1 lakh. These are all the details. Now, I'll give you the details of advance tax paid. Advance tax payment. Details are as under. Number 1, date of payment, amount paid. The date of payment is 15 June 2019. Amount paid is 50,000. On 15 September 2019, the amount paid is another 50,000. December 2019, yet another 50,000 is paid. Then 31st March 2020, rupees 1 lakh paid. Rupees 1 lakh paid. This much is only paid. Determine the interest payable under 234 B and 234 C. Assuming the balance tax is paid, assuming the balance tax is paid on assuming that the balance tax is paid on 30th June 2020. 30th June 2020. These are all the details available. These are all the details available. Now, first point, interest under (234)(b). There, first information is assessed tax. Assessed tax is tax on the total income minus TDS minus TCS. It comes to rupees 6 lakhs. 90% of assessed tax. 90% of assessed tax is 5,40,000. It is 5,40,000. Aggregate amount of advance tax paid is 50 plus 50 plus 50, 1,50,000 plus 1,00,000, 2.5 lakhs is paid. 2,50,000 is paid. $2,50,000 is paid. So our observation, the aggregate amount of advance tax paid is less than 90% of assessed tax. It is less than 90% of assessed tax. This is the observation. So certainly interest under 234B is leviable. It is leviable. This is the first understanding. Yes, there is levy of 234B. This clarity you should be having. Next is computational aspect. For computation, what are the parameters? Number one, base. Base is equal to assessed tax minus the aggregate amount of advance tax paid. Assessed tax is 6 lakhs. The aggregate amount of advance tax paid is 2.5 lakhs. 3.5 lakhs is the base. 3.5 lakhs is the base. Now, the rate is 1% per month or part thereof. Then the period is starting on the first day of the assessment year, it goes up to the date of payment when the balance tax is paid 30th June. Balance is paid on 30th June. So up to 30th June 2020 there will be interest computation. So interest is equal to ₹3.5 lakhs into 1% into April, May, June, 3 months. This is the period for which we do compute interest under 234B, which is 3,50,000 into 1% into 3 months. It is 10,500. It is 10,500. This is the interest. Next is interest under 234C. Next is what? Interest under 234C. Let us compute interest under 234C. Under 234C. When 234C interest comes, let us see. Now, here number 1, 15% of tax due on returned income. 15% of tax due on returned income. Tax due on returned income is tax on total income minus TDS minus TCS. 6 lakhs into 15%. 6 lakhs into 15%. It comes to 90,000. Number 2, you should also compute 12% of tax due on returned income, which is 6 lakhs into 12%, which is 72,000. Number 3, you should also compute 45% of tax due on returned income. Tax due on returned income on that 45% is 6 lakhs into 45% is 2,70,000. Then 36% of tax due on returned income is 6 lakhs into 36%. We'll first of all have the inputs now before doing the computation, which is 2,16,000. Just 2,16,000. Next is see this 75% of tax due on 75% of tax due on returned income, which is 6 lakhs into 75 percentage. 6 lakhs into 75, which is 4.5 lakhs. Okay, these are all the inputs we have. Correct? Now, what we have gathered is basic inputs for deciding as to whether 234C interest will come or not. We have basic inputs. Fine. Let us take advance tax paid till 15th June 2019, 50,000. Till 15th September 2019, you have paid another 50,000. So, 1 lakh. Advance tax paid till 15th December 2019, another 50,000 is paid. So, 1,50,000. Then advance tax paid till 15th March 2020. You have not paid anything additionally. You pay only on 31st March. So, 1,50,000. This is the advance tax paid. Now, here this is less than 12% of tax due on returned income. It is less than 12% of tax due on returned income. So, this is our observation. For certainly, interest comes under 234C. Interest under 234C comes. How do we compute interest? We shall take 15% of tax due on returned income, 90,000. Advance tax paid is 50,000 into 1% for 3 months. This will be the interest under 234C. So, the advance tax paid till is less than 12% till 15 June. Then advance tax paid till 15th September 2019 is less than 36% of tax due on returned income. It is less than 36%. So, once again the computation comes. We shall take 45%, 2,70,000 minus 1 lakh rupees, 2,70,000 into 1 lakh into 1% into 3 months. This is 45% of tax due on returned income minus advance tax paid till 15th September into 1% into 3 months. This is how we compute the interest. The advance tax paid till 15th December is less than 75% of tax due on returned income. 75% of tax due on returned income. So what is 75% of tax due on returned income? 4,50,000 minus the advance tax paid till that date, 1,50,000. 4,50,000 minus 1,50,000 into 1% into 3 months. This is how we compute interest under 234C. The advance tax paid till 15th March is less than tax due on returned income. So we should take entire tax due on returned income 6 lakhs minus the advance tax paid till 15th March. I shall take this into 1% into 1 month. This is how the interest is being computed under 234C. So 40,000 into 1% into 3 months, 1,200. This is 1,70,000 into 1% into 3 months, 5,100. 4,50,000 minus 1,50,000, 3 lakhs into 1% into 3 months, 9,000. 6 lakhs minus 1,50,000, 4,50,000 into 1% is 4,500. So the total interest under 234C is 1,200 plus 5,100 plus 9,000 plus 4,500, 19,800 becomes the interest under 234C. So what the assessee has to do, okay, he has to pay how much? Amount payable by X amount payable by X is tax uh, 6 lakhs. The tax on returned income is 10 lakhs minus TDS 3 lakhs minus TCS 1 lakh minus advance tax paid is 2.5 lakhs tax payable is 3.5 lakhs. It is 3.5 lakhs. interest under 234B. Interest under 234B is 10,500. Interest under 234C is 19,800. Total amount payable is 5 plus 6 plus 7. What is 5 plus 6 plus 7? 3,50,000 plus 10,500 plus 19,800, which is 3,80,300. This is the amount payable by him after considering the interest under 234B and C. After considering the interest under 234B and C. This should be paid. This is called self-assessment payment. This is called self-assessment payment. Correct? So this is a classical illustration for interest under 234B and 234C. With this, our discussion on the chapter advanced tax is over. That is, chapter number 13 is over. There are some more aspects which you can appreciate only after learning presumptive provisions in PGBP. So that I am not covering here. With this, our discussion on chapter number 13 is over. Now I am starting chapter number 12, TDS. Chapter number 12, TDS. Already introduction to the topic TDS is given. Now we are just starting the core discussion. Chapter number 12. In this chapter, we cover both the TDS as well as TCS. TDS as well as TCS. There, the first segment is TDS and HPO. We will discuss TDS first. TDS. The TDS provisions are contained in chapter 17B of Income Tax Act. They are contained in chapter 17B. Okay, there sections to be discussed. Sections to be discussed. Number 1, section 192. Section 192. Section 192A, 193, 194A, 194B, 194BB. Next is 194C, 194D, 194DA, 194G, 194H, 194I, 194IB, there is one more section 194IC not included here, but it is there. 194IC, 194LA, 194IA. Is there. Next is 194J, next is 194M, next is 194N, next is 195, 199, 200, next is 201. These are all the provisions relating to TDS. (276B). This many provisions are there in TDS chapter, little big only. There, the first thing is this. The payee, applicability of surcharge in education cess. Applicability of surcharge and health and education cess. There, we divide the payee into two categories. Non-resident, non-corporate, non-resident. and foreign companies, non-corporate, non-resident and foreign companies, residents, where the payee is non-corporate, non-resident or foreign company, TDS rate shall be incremented by surcharge if applicable, and shall be incremented by health and education cess, by health and education cess. It shall be incremented by health and education cess. If the payee is a resident, payment is divided into two. Payment is other than salary. Payment being salary. If it is payment being salary, the TDS rate shall be incremented by surcharge if applicable, and by health and education cess, even if the payee is a resident. Other than salary, TDS rate is not incremented by surcharge and health and education cess. It is not incremented by surcharge and health and education cess. That way you need to understand. So when surcharge comes and when health and education cess comes, you need to understand. Only if the payment is made to a non-corporate, non-resident or foreign company, TDS rate shall be incremented by surcharge and health and education cess. Surcharge only if it is applicable. Okay, then where the payment is made to a resident and it is not salary, it shall not be incremented by surcharge and health education cess. Where the payment is made to resident and it is salary, it shall be incremented by surcharge if applicable, and it shall be incremented by health and education cess automatically. That is 35. Now 36 page number I am telling. This is first point you need to note. Next is lack of PAN, permanent account number, Impact on TDS rate. Lack of PAN. What is PAN? Permanent account number. We will discuss in filing of returns. This is allotted by the department to the assessees. It will help the department in spotting the assessees. Lack of PAN. Impact on TDS rate. Listen to me. Assessee, that is payee, recipient of income, doesn't have PAN, permanent account number, doesn't have permanent account number. Such assessee we will divide into two. Resident, non-resident. Non-corporate, non-resident. NCNR na non-corporate, non-resident and foreign companies. This is one set. Resident, non-corporate, non-resident and foreign companies. Here no PAN na 206 AA says where TDS rate, relevant TDS rate is less than 20%. It is greater than 20%. Where the relevant TDS rate is less than 20%, tax shall be deducted at the rate of 20%. Where the relevant TDS rate is greater than 20%, it is greater than 20%. Tax shall be deducted using the relevant TDS rate In these cases, we need a minimum TDS of 20%. In case of non-corporate, non-residents and foreign companies, space is not there. I'll use connector A. The income paid is interest royalty fee for technical services consideration for transfer of capital asset interest royalty fee for technical services consideration for transfer of capital asset others where in this case 206 AA doesn't apply. Subject to conditions. Tax could be deducted at applicable rates. No minimum 20% tax deduction. What conditions I'll tell you subsequently. If it is others, 206A will apply. 206AA will apply. What is that? Where the applicable TDS rate is less than 20%, tax shall be deducted at the rate of 20%. Tax shall be deducted at the rate of 20%. This you need to understand. Tax shall be deducted at that rate. Next is, what are the conditions to be fulfilled? Note 1. The payee condition supra referred above is this. Payee shall furnish name, following details shall be furnished by the deductee, that is payee, to the deductor that is payer. The following details shall be furnished to the deductor, that is payer. Who should furnish? Payee. Number 1, name, email ID, contact number, address, in the country of which the deductee is a resident, address in the country of which deductee is a resident, a certificate of his being resident in any country from the government of that country a certificate of his being resident in a country from the government of that country. This is called tax residency certificate. Certainly he is resident of some other country, from that country he has to get tax residency certificate stating that he is resident of that country. Number 4, tax identification number. Tax identification number in the country of his residence. நம்ம ஊரில் பேன் மாதிரி அந்த ஊரில் என்ன இருக்கோ in the country of his residence. These details we need to obtain. Or if no tax identification number is there, unique identification number like Aadhaar, unique identification number like Aadhaar, these are all to be furnished by him. Then he can avoid 206AA and suffer TDS at the rate prescribed. Note number 2. Where the payee suffers TDS at the rate of 20% under 206AA on account of lack of PAN, where the assessee suffers TDS at the rate of 20% under 206AA on account of lack of PAN. Where the assessee suffers TDS at the rate of 20% under 206AA on account of lack of PAN. it shall not be incremented by surcharge in health and education cess. It shall not be incremented by surcharge in health and education cess. That way. These are all the basic points you need to note before we enter into the core discussion. Fine. Now we enter into the next area of discussion, section 192. TDS on salary, section 192. There, first let us take 192 subsection 1. What it says, inga payer is employer, payee is employee, payee is employee, payment is income chargeable under the head salary. Income chargeable under the head salary. Then the payer has TDS obligation. Payer employer has TDS obligation. At the time of payment of salary, at the time of payment of salary is having TDS obligation, has TDS obligation at the time of payment of salary. TDS obligation. Here, how do we quantify the TDS? TDS on salary is nothing but TDS on salary to be made every month. To be made every month. How do we quantify the TDS on salary to be made every month? TDS on salary to be made every month. tax on salary computed using tax rates given in Finance Act Schedule 1 Part 3. Okay, that divided by 12. Tax on salary computed using tax rates given in Finance Act first schedule part 3 divided by 12. That will be the TDS. That you need to understand. Note. So tax shall be deducted at source at when? At the time of payment. Note 1. Employee can be resident or non-resident. Employee can be resident or non-resident. No issues. The relevant section is only 191 or 192, sorry. Employee, that is payee. Number 2, employer can be any person. That is individual or HUF or anybody, can be any person. Employer can be any person. These are all not the issues. This is the first segment of our discussion. 192 subsection 1A, 192 subsection 1B, section 1010 CC, 40 class A 5, all these provisions we are going to discuss now. Space is not there, connector in the next page. These many things we are going to discuss. What are they? 192 1A, 192 1B, 1010 CC, 40A 5. Listen to me. Employer is giving non-monetary perquisites to the employee. Provides inter alia, provides among many, provides non-monetary perquisites, provides what? Non-monetary perquisites to the employee These are valued in accordance with Rule 3 included in computing income under the head salary of the employee. These are included in computing income under the head salary of the employee. These are taxable in the hands of employee employer has TDS obligation. Employer has TDS obligation even on these non-monetary perquisites. Has TDS obligation even on non-monetary perquisites. Has TDS obligation even on these non-monetary perquisites. Example, see this illustration. See this illustration. Illustration 1. Assess is X. Previous year 1920. Assessment year 2021. Is employee of X Limited. Is employee of X Limited. Remuneration details. Remuneration details. Basic salary $50,000 per month. 50,000 per month is given rent-free accommodation is given rent-free accommodation. There accommodation provided to the employee was taken on lease by the employer. It was taken on lease by the employer. The lease rent paid by the employer is rupees 1,20,000 per annum. Lease rent paid by the employer is 1,20,000 per annum. These are all the details, correct? Now, the TDS obligation of X Limited. We are now going to discuss what the TDS obligation of whom? X Limited, employer, under 192. The TDS obligation under section 192 we are going to discuss. There, number 1, basic salary. The basic salary is 50,000 into 12, 6 lakhs. Next is perks in respect of rent-free accommodation. Perks in respect of rent-free accommodation. How do we compute? It is lower of 15% of 6 lakhs and rupees 1,20,000 being the lease rent. 15% of 6 lakhs, 6 lakhs into 15% is 90,000. So 90,000 or 1,20,000 which is less, 90,000. This is the perquisite in respect of rent-free accommodation. Determine in accordance with Rule 3, Sub-Rule 1. Now, the salary gross one plus 2 is 6,90,000. Then standard deduction under 16, 50,000. Income under the head salary. Income under the head salary is 3 minus 4, which is 6,40,000. This is 6,40,000. On that, we need to apply the Finance Act first schedule part 3 rates. So the tax on such salary first 2.5 lakhs 0. Mr. X is a non-senior citizen, NSC. So therefore, tax on salary first 2.5 lakhs 0. Next 2.5 lakhs is 5%, 12,500. Next is excess 1,40,000 at the rate of 20%. 1,40,000 at the rate of 20%, which is 28,000. Okay, this shall be incremented by health and education cess. Incremented by health and education cess. 12,500 plus 28,000, 40,500 into 104 percentage. 42,120. This is okay. The tax, and this is we are incrementing it health and education cess. This is the tax on salary. Monthly TDS is 42,120 divided by 12. Divided by 12. 3,510 every month we shall withhold. The monthly TDS is this. Fine. This is the monthly TDS. Okay, next is we will develop further. Before that, we will come to the provisions. (192) subsection 1A and 1B. Employer may at his option agree to discharge the tax obligation of the employee in respect of non-monetary perquisites, non-monetary perks. Employer may at his option, no compulsion, may at his option agree to discharge the tax obligation of the employee in respect of non-monetary perks, in respect of non-monetary perks enjoyed by employee, enjoyed by employee. In such case, the employer instead of withholding the tax attributable to non-monetary perquisites In such case, the employer, instead of withholding the tax attributable to non-monetary perquisites from the salary payable to the employee, shall pay it to the credit of central government out of his own funds. In such case, the employer, instead of withholding the tax attributable to non-monetary perquisites from the salary payable to the employee, shall pay it to the credit of central government out of his own funds. Out of his own funds. Out of his own funds. Okay, in our example only, in illustration 1, suppose the employer has undertaken to pay the tax on non-monetary perquisites enjoyed by X. In illustration 1, suppose the employer has undertaken to pay the tax on non-monetary perquisites enjoyed by X. In such case, what shall be done? Tax on salary 42,120. Tax on salary is what? 42,120. That shall be bifurcated into two. Tax attributable to non-monetary perquisites. Tax attributable to non-monetary perquisites and then tax attributable to other elements of salary. Attributable to other elements of salary. What is this? We need to ascertain. Here 42,120 is the tax on 6,40,000. On that non-monetary perquisite is 90,000. So 90,000 divided by 6,40,000 into 120. 90 divided by 6,40,000 into 42,120. So the tax attributable comes to 5,9 5923. This comes to 5923. This is balance. 42,120 minus 5923, the difference. 42,120 minus 5923, 36,197. Now the tax to be withheld every month, tax to be withheld every month out of salary paid to employee. It is nothing but 36,197 divided by 12. What is 36,197 divided by 12? Which is 3016. 3016. This much amount should be withheld every month. Out of what? Salary paid to the employee. This is the monthly TDS plus tax to be paid by employer out of his own funds. Out of his own funds. 5923 divided by 12. 5923 divided by 12, which is 494. 494. 494. 3016. Correct. This is 494. This should be paid out of his own funds. Tax to be paid by the employer out of his own funds. This is that. Fine. This much should be paid out of his own funds. Now, in the hands of the employee, credit is given for both. Employee gets credit in respect of this as well as this. Employee gets credit in respect of this as well as this. This is treated as if it is TDS. This is treated as if it is TDS. Treated as if it is TDS. That you need to note. Note 1. When employer bears the tax payable by the employee on non-monetary perks enjoyed by him. When employer bears the tax payable by the employer non-monetary perks enjoyed by him, employer discharges the obligation of the employee, discharges the obligation of the employee. That means tax on non-monetary perks, tax on non-monetary perks payable by the employee but discharged by the employer, discharged by the employer becomes perquisites in the hands of employee as per section 17 class 2 subclass 4. As per that it becomes perks. However, this is exempt in the hands of employee. This is exempt in the hands of employee under section 1010 CC. It is exempt in the hands of employee under 1010 CC. Next is the tax on non-monetary perquisites payable by the employee but discharged by the employer. This is a business expenditure for the employer. However, it is disallowed under 40A(5). However, it is disallowed under section 40A(5). It is not allowed as a deduction. It is not allowed as a deduction. These are all the points you need to remember. Fine. Next is section 192 2A. 192 2A. Employee is entitled to relief under 89(1). If employee is entitled to relief under 89(1), and he has submitted Form 10E to the employer. Then employer shall consider this in quantifying TDS on salary. Quantifying TDS on salary. We will discuss 89(1) relief subsequently, then you can appreciate this. Next is section 192 2B. Employee at his option may furnish the details of his income under other heads. Employee at his option may furnish the details of his income under other heads. May furnish the details of his income under other heads. And tax deducted thereon. Employee may at his option furnish the details of his income and tax deducted thereon, obviously to whom? To the employer. To the employer. Then employer shall consider them in quantifying the TDS under 192. Employer shall consider them in quantifying the TDS under 192. Shall consider them in quantifying the TDS under 192. Example, illustration number 2. Illustration number 2. X is employee of X Limited. Salary per month 50,000. Salary per month is 50,000. Now he furnishes employee to X Limited furnishes the details of rental income and TDS thereon. He furnishes the details of rental income and TDS thereon. In a rental income, rent from let out property $30,000 per month. Rent from let out property 30,000 per month. TDS under 194I at the rate of 10%, tax deducted on it is 36,000. Municipal taxes paid in respect of the house property is 30,000. Interest on borrowing for purchase of the property 60,000. These are all the details he has revealed. Rent from let out property, the tax deducted already there under 194I, municipal taxes paid, interest on borrowing, these details are there, correct? Now the employer may consider these information TDS under 192 considering only salary. TDS under 192 considering only salary. If you see salary is 6 lakhs, tax thereon first 2.5 lakhs 0, next 2.5 lakhs 12,500 plus 1 lakh 20,000, 20% 20,000 into health and education cess 4%, 32,500 into 104%. comes to 33,800. Monthly TDS 33,800 divided by 12, 2817. This is the monthly TDS considering only the salary income. Next is the TDS under 192 considering the income offered under other heads and TDS thereon. TDS thereon. TDS under 192 considering the income offered under other heads and TDS thereon. Here in fact his monthly salary is 54,167. Okay, so therefore salary is this is how it is computed, na? 54,167 into 12 minus 50,000 standard deduction. Fifty-four 167 into 12, 6,50,000 minus 50. That way it is ascertained. So this is 54,167 salary per month. Fine. Now the salary is rupees 6 lakhs after standard deduction. This is standard deduction. Under 16. Next is income from house property. Income from house property, how we have computed? Rent is 3,60,000 minus municipal taxes 30,000. Okay, we get net annual value. So 3,30,000 into 30%, 99,000 is the standard deduction minus interest on borrowing 60,000. So this is 3 lakhs, 2 lakhs 70 minus 99,000, 1,71,000. What is this? You should understand. This is rent. This is municipal taxes. This is a standard deduction of 30%. This is interest on borrowing. So we get house property income of 1,71,000. So the total income 1 plus 2 is 7,71,000. 7,71,000. Now we need to compute tax thereon. Tax thereon is up to 6 lakhs, tax is 32,500 plus 1,71,000 into 20 percentage. 34,200 plus 32,500. So this way slab rates only. It comes to 66,700 into 104 to get health and education is incremented. 66,700 into 104 percentage, which is 69368, so 370. This is the tax thereon minus TDS under 194I, 36,000. Then tax to be deducted under 192 comes to 33,370. 33,370. Here the monthly TDS under 192. Under 192 becomes 33,370 divided by 12. Which is 2781. 2781. That means what is our understanding? The understanding is, or our observation is, the monthly TDS under 192 observation. Our observation I am giving. Monthly TDS under 192, considering only salary income is more than monthly TDS under 192, considering income under other heads, income under other heads and tax deducted thereon. அப்படின்னா என்ன? Considering income under other heads and tax deducted thereon is having the effect of pulling down the income. Considering income under other heads, considering income under other heads and tax deducted thereon, has the impact of reducing the TDS under 192, is having the impact of reducing the TDS under 192. In this case, in such a case, the employer shall not consider the income under other heads. Consider the income under other heads and tax deducted thereon while quantifying the TDS under 192. While quantifying the TDS under section 192, shall not do this. This is to be noted. So, a very good illustration is given to you to appreciate this. We can write here only in 49A. If consideration of income under other heads, if consideration of income under other heads and tax deducted thereon if considering income under other heads and tax deducted thereon has the effect of reducing the TDS under 192, if consideration of income under other heads and tax deducted thereon has the effect of reducing the TDS under 192, then they shall be ignored in quantification of TDS under 192, that you need to note. There is one more point. However, if the assessee offers loss under the head house property, then such loss and tax deducted on the rent under 194I If, however, if the assessee offers loss under the head house property, then such loss and tax deducted on the rent under 194I shall be considered in quantifying TDS under 192, even though they have the effect of reducing the TDS under 192, reducing the TDS under 192. However, if the assessee offers loss under the head house property, then such loss and tax deducted on the rent under 194I shall be considered in quantifying the TDS under 192, even though they have the effect of reducing the TDS under 192. For that, I'll give you illustration number 3. Illustration number 3. Illustration 3. Import the facts from illustration 2. The only change is interest on borrowing earlier we assumed it to be 60,000. It is not just 60,000. The interest on borrowing itself is 3 lakhs. Interest on borrowing is rupees 3 lakhs. In such case, there is loss from house property 3,60,000 minus 30,000 municipal taxes minus standard deduction 99,000, interest on borrowing 3 lakhs. There is a loss 3,60,000 minus 30,000 minus 99,000 minus 3 lakhs. So the loss from house property comes to 69,000. Okay. This shall be considered in quantifying TDS under 192. This shall be considered in quantifying the TDS under 192. The TDS under 192 shall be salary rupees 6 lakhs after standard deduction, loss from house property 69,000. After setting off the loss from house property, okay, the net salary will be 5,31,000. On that, tax comes to 18,700. If you increment it with health and education cess, we get 19,450. that divided by 12 will give you the monthly TDS, Even though the consideration of loss from house property and the TDS under 194I has the effect of reducing the TDS under 192, they shall be considered in quantification of TDS under section 192. They shall be considered in quantification of the TDS under section 192. This is specifically given in the proviso to section 192 2B. Fine. Next is section 192 2D and rule 26C. Rule 26C. If the employee receives house rent allowance, is entitled to exemption under section 1013A, is entitled to exemption under 1013A. For determination of TDS under 192, only the non-exempted HRA shall be considered. Only the non-exempted HRA shall be considered. Provided the employee furnishes the following details: to to the employer in form 12BB, provided the employee furnishes the following details to the employer in form 12BB. What are all the details? Name, address, PAN, etc. of the landlord. To whom the employee has paid the rent. To whom the employee has paid rent. Note: however, the aforesaid details need not be furnished if the aggregate rent paid during the previous year doesn't cross rupees 1 lakh. However, the aforesaid details need not be furnished if the aggregate amount of rent paid during the previous year doesn't cross rupees 1 lakh. So this you need to understand. Next is if the employee receives leave travel concession, he is entitled to exemption under 10(5). While estimating TDS under 192, the employer shall consider only non-exempted LTC. Non-exempted LTC provided the employee furnishes the evidence of expenditure through Form 12BB to the employer, provided the employee furnishes the evidence of expenditure through Form 12BB to the employer. Similarly, the employee may at his option furnish income or loss from house property employee may at his option furnish the income or loss from house property, furnish the details of income or loss from house property then the employer shall consider them in quantifying TDS under 192. The employee may at his option furnish the income or loss from his house property to the employer. Then the employer shall consider them in quantifying the TDS under 192. If the employee has paid any interest in respect of such a house property, if the employee has paid any interest in respect of such house property, and wants deduction under 24 class B in computation of income from house property, the employee has paid any interest in respect of such house property and wants deduction under 24 class B in respect 24 class B in computation of house property, for the purpose of determination of TDS under 192. For the purpose of determination of TDS under 192. You shall furnish in form number 12BB the details, the following details. You shall furnish in Form 12BB the following details to the employer. The employee may at his option furnish the details of income or loss from his house property to the employer. Then the employer shall consider them in quantifying the TDS under 192. If the employee has paid any interest in respect of such house property and wants deduction under 24 class B in computation of income from house property for the purpose of determination of TDS under 192, shall furnish in form number 12BB the following details to the employer. What details? Number 1. Name of lender, address of lender, PAN of lender, PAN of lender. Next is if the employee wants the employer to consider deductions under Chapter 6A. If the employee wants the employer to consider the deductions under Chapter 6A for the purpose of quantification of TDS under 192, he shall furnish the evidence of eligible investment or expenditure he shall furnish the evidence of eligible investment or expenditure to the employer through Form 12BB. If the employee wants the employer to consider the deductions under Chapter 6A for the purpose of quantification of TDS under 192, he shall furnish the evidence of eligible investment or expenditure to the employer through form number 12BB. 12BB. These are all the points given in 192 2D, read with Rule 26C. Section 192 subsection 6. Salary is payable in foreign currency. Then it shall be converted into Indian rupees for the purpose of TDS. It shall be converted into rupees using telegraphic transfer buying rate on the date of payment. On the date of payment. it shall be computed into rupees using the telegraphic transfer prevalent on the date of payment. This way you need to understand. Now, with this, we are through with section 192 at inter level. This much is sufficient. The next section is section 192A. Section 192A. TDS on premature withdrawal from employees provident fund. TDS on premature withdrawal from employees provident fund. Now, first of all, here what is the payment you should understand. The employee is getting accumulated balance is getting accumulated balance in his account maintained under Employees Provident Fund Scheme 1952. Employees Provident Fund Scheme 1952. Employees having accumulated balance in his account maintained under the Employees Provident Fund Scheme 1952, that he is withdrawing, paid by the Provident Fund Commissioner or any other person authorized by him. So, the Provident Fund Commissioner or any other person authorized by him is paying the accumulated balance in his employee's account maintained under the Employees Provident Fund Scheme 1952. This is government scheme, not the Provident Fund Scheme of the employer. This is being paid. And this sum, so who is the payer? Payer is the Provident Fund Commissioner or any other person authorized by him. Employee is the payee, and the payment is the accumulated balance in the employee's account maintained under the Employee Provident Fund Scheme 1952. This is not exempt. This is not exempt. It is taxable nu vechikalam. then in such case the payer, the person responsible for making payment, has TDS obligation. The TDS obligation is at the time of payment. Has TDS obligation at the time of payment. The Provident Fund Commissioner or any other person authorized by him has TDS obligation at the time of payment. Okay, and tax shall be deducted at source. At what rate? Before that, this accumulated balance which is paid is greater than or is equal to 50,000. If it is less than 50,000, there is no TDS obligation. It is greater than or is equal to 50,000. Then tax shall be deducted at source. What is the TDS rate? The TDS rate is it all depends. If the employee furnishes his PAN to the deductor, doesn't furnish his PAN to the deductor, doesn't furnish his PAN to the deductor, furnish his PAN to the deductor, doesn't furnish the PAN to the deductor. If the employee furnishes his PAN to the deductor, then the TDS rate is 10%. Doesn't furnishes his PAN, the tax shall be deducted at source at maximum marginal rate. Maximum marginal rate. Which is 42.744%. At this rate, tax shall be deducted at source. To consolidate, where the accumulated balance in the employee's account maintained under the Provident Fund Scheme 1952 is paid to the employee by the Provident Fund Commissioner or any other person authorized by him, and the payment is crossing 50,000 and it is not exempt, then the Provident Fund Commissioner or any other person authorized by him has TDS obligation when at the time of exempt. If it is not exempt, has TDS obligation. The TDS rate depends upon whether he furnishes his PAN or doesn't. Okay, this is what given here. The next section is section 193. The next section is section 193. TDS on Interest on securities. Here the TDS obligation arises only when the payment is crossing 50,000. That you need to note. Section 193. TDS on interest on securities. TDS on interest on securities. First of all, you should know what is interest on securities meaning. Interest on security means this term is defined in section 2 class 28b. This is nothing but interest on central government or state government securities. Number 2, interest on debentures. Interest on debentures. Issued by local authority or statutory corporations or company these are all regarded as interest on securities. So where the central government or state government or local authority or statutory corporation pays interest on securities to a resident then that is TDS obligation. Listen to me. There is TDS obligation. Company we should have included. Na? We will remove central government or state government, company. Company or local authority or statutory corporation pays interest on securities. Then to a resident, the company or local authority or statutory corporation has TDS obligation under 193. as TDS obligation under section 193. There first is, we shall know what is the TDS rate. The TDS rate is 10% subject to 206 AA. What is 206 AA? Explained in the current session only a few minutes ago, where the deductee, the payee, does not have PAN, the minimum TDS rate is 20%. Timing of TDS. At the time of payment or the time of credit, whichever is earlier, we already discussed. At the time of payment or credit, in introduction only I gave entries also. At the time of payment or credit, whichever is earlier. So that you need to note. Okay. There are certain circumstances in which there is no obligation to deduct tax at source under 193. Cases to which section 193 shall not apply. Cases to which section 193 shall not apply. Number 1. Case 1. Payee is insurance company. If the payee is an insurance company, there is no TDS obligation under 193. Payer is central government or state government. That means there is no TDS on interest on government securities. Interest on government securities. இதுக்கு ஒரு exception. However, tax shall be deducted at source on interest payable on 7.75% savings taxable bonds 2018 exceeding rupees 10,000. However, tax shall be deducted at source on interest payable on 7.75 percentage savings taxable bonds 2018 exceeding 10,000. That way. Then case number 3. interest is payable on listed securities in demat form. On listed securities in demat form, issued by companies. Interest is payable on listed securities in demat form issued by companies. Case number 4. Where payer is a company in which public are substantially interested. Payer is company in which public are substantially interested. And the payee is individual or HUF. And the payment is interest on debentures. Interest on debentures, which may be listed or unlisted. And the amount of interest on debentures doesn't cross 5,000. And it is paid through account payee check. APC na account payee check. It is paid through account payee check. So the amount doesn't cross 5,000 and it is paid through account payee check and the payee is resident individual or HUF. Then there is no TDS obligation. So this is section 193. Section 193. Section 194A. The next section is what? Section 194A. TDS on interest other than interest on securities. TDS on interest other than interest on securities. TDS on interest other than interest on securities. Now, the payee should be a resident payee should be a resident and the payment should be interest other than interest on securities. Other than interest on securities. payment is interest other than interest on securities. Payer may be anybody, any person. And the interest other than interest on securities is crossing 5,000. Is crossing 5,000. So payee is resident, payment is interest other than interest on securities, and it is crossing 5,000. Payer can be anybody. Then the payer has TDS obligation. The payer has TDS obligation. Under which section? Under 194A. The TDS rate is 10%. Subject to 206 AA. That means if the payee has no PAN, then the rate is 20%. Timing of TDS is at the time of payment or at the time of credit, whichever is earlier. This is the timing of TDS. Fine. But there are some important points requiring attention. Let me explain them. Note 1. Here payer is an individual or HUF. Payer is individual or HUF. Liable to tax audit in the immediately preceding previous year. Okay, liable to tax audit in the immediately preceding financial year. Not liable to tax audit in the immediately preceding financial year. Immediately preceding financial year. Like this I am dividing. Financial year in which tax is to be deducted at source is 1920 nichikla. Preceding year in 1819. In that year liable to tax audita, not liable to tax audita. Liable to tax audit na has TDS obligation under 194A. Where the individual or HUF, okay, is not liable to tax audit in the immediately preceding financial year has no TDS obligation has no TDS obligation under 194A, has no TDS obligation. Now it becomes necessary for you to appreciate when there is liability to tax or debt. Okay, in PGBP chapter we will have a detailed discussion, but now for the moment this is the way you need to understand for the moment. Assessee carries on business assessee carries on profession. If the turnover from the business is greater than 100 lakhs, 1 crore, carries on profession, the gross receipts from profession is crossing 50 lakhs. And the gross receipts is crossing 50 lakhs. Liable to tax or debt. Carries on profession, gross receipts are crossing 50 lakhs, then there is liability to tax or debt. That way you need to understand. This is the main part of section 194A. 194A. Now we are going to discuss the cases to which 194A doesn't arise. There is no TDS obligation. Cases in which there is no TDS obligation. There is no TDS obligation under section 194A. Cases in which there is no TDS obligation under 194A. No TDS obligation under section 194A. Number 1. Payee is a banking company. Payee is a cooperative land mortgage bank. Payee is a cooperative society engaged in banking business. Society engaged in banking business. Payee is a statutory corporation Payee is LIC. Payee is a company or a cooperative society engaged in insurance business, engaged in insurance business, payee is any person notified by central government in official gazette, notified by the central government in official gazette. In these cases there is no TDS obligation. There is no TDS obligation. If payee is any of these persons, then there is no TDS obligation. Next is the payee is or number 2, where a firm pays interest to its partners, where the firm pays interest to the partners, then there is no TDS obligation. There is no TDS obligation. Where interest is interest on sums deposited under Kisan Vikas Patra, Indira Vikas Patra, or national savings certificates or post office monthly income account, or it is post office time deposit account, or it is post office recurring deposit account, then in these cases there is no TDS obligation. On these interests there is no TDS obligation. On this there is no TDS obligation. Number 4, the central government is granting interest on belated refunds under 244A. If the assessee is entitled to refund under the provisions of Income Tax Act, And if there is a delay in granting such a refund on such interest, okay, the central government has no need to deduct tax at source, has no obligation to deduct tax at source. Okay. If the interest is discount on zero coupon bonds, we all know what is zero coupon bonds. If the interest is discount on zero coupon bonds, there is no TDS obligation. Number 6. Next is where bank has to pay interest on deposits other than time deposits. Other than time deposits. That means if you are having savings account, on that if you have put money, okay, on that if you are getting interest, bank has no TDS obligation. Bank need not deduct tax at source on the interest on deposits other than time deposits. Note, time deposit means fixed deposit and also recurring deposit and also recurring deposits. This is what we mean by time deposits. On this there is other than time deposits on which if any interest is payable, there is no TDS obligation. Next is 7. Where any interest is payable pursuant to the award by Motor Accident Claims Tribunal. Interest awarded by the Motor Accident Claims Tribunal. Motor Accident Claims Tribunal. Where the interest is interest awarded by Motor Accident Claims Tribunal. And amount paid, aggregate amount paid during the financial year doesn't cross 50,000. Then there is no TDS obligation. No TDS obligation. Note, if the aggregate amount of interest supra paid during the financial year exceeds 50,000, then there is TDS obligation at the time of payment. For this alone, it is only at the time of payment, where the interest is interest awarded by Motor Accident Claims Tribunal. If there is any motor accident, to the victim or legal heir, compensation is awarded by Motor Accident Claims Tribunal, and if there is a delay in paying the compensation, interest is also payable. That interest, if it is crossing 50,000, then at the time of payment there is a TDS obligation. Doesn't cross 50,000, then there is no TDS obligation. This is to be noted. Next is interest on deposits made with post office under senior citizen scheme interest on deposits made with post office under the senior citizen scheme doesn't cross 50,000, then there is no TDS obligation. Interest on deposits made with post office under the senior citizen scheme doesn't cross 50,000, then there is no TDS obligation. Next is housing finance companies. There HFC na housing finance companies. Okay, you are placing deposits with housing finance company. Has placed deposits with housing finance company. On such deposits, the housing finance company is paying interest. And the interest payable doesn't cross 5,000. It doesn't cross what? 5,000. Doesn't cross 5,000. Then there is no TDS obligation. The housing finance company is paying interest and it is not crossing 5,000, then there is no TDS obligation. Note: if the housing finance company has adopted core banking solution software CBSS na core banking solution software, then interest payable on deposits by all branches of housing finance company shall be compared with rupees 5,000. Suppose if you are placing deposit with different branch of the same housing finance company, the interest on all these deposits should be aggregated and compared with 5,000. If core banking solution software is not adapted, then interest payable on deposits with each branch shall be compared with rupees 5,000. If the core banking solution software is not adapted, the interest payable on deposit with each branch should be compared with 5,000. That you need to understand. The next point is payer is bank. Payer is bank or banking company. Payee is resident. And the payment is interest on deposits. Time deposits. Payment is interest on time deposits. And if it doesn't cross $40,000, if the payee is a non-senior citizen, NSC na non-senior citizen, if it doesn't cross 50,000, if the payee is a senior citizen, if the payee is senior citizen, then there is no TDS obligation. There is no TDS obligation. Note, if the banking company has not adopted core banking solution software, then the threshold limit supra is for payment made by each branch of the banking company. Next is where the payer is Primary Agricultural Credit Society, Primary Agricultural Credit Society, or where the payer is Primary Credit Society, or where the payer is Cooperative Land Mortgage Bank, or where the payer is Cooperative Land Development Bank, in these cases there is no TDS obligation. Any deposit, it can be time deposit or non-time deposit, on any interest there is no TDS obligation. Payer is Cooperative Bank other than those referred to in 11. Payer is Cooperative Bank other than those referred to in 11. In such case, interest on time deposit is made. Interest on time deposit is made to a resident who may be member or non-member, member or non-member, but should be resident. Member or non-member. On this interest, doesn't cross 40,000, is a non-senior citizen, doesn't cross 50,000, if payee is a senior citizen, then there is no TDS obligation. Note, if core banking solution software is not adopted, then the threshold limit supra is in respect of payments made by each branch of the cooperative bank. Point number 13. Next is a cooperative society pays interest to another cooperative society then there is no TDS obligation. A cooperative society not being cooperative bank, if it pays interest to its members, there is no TDS obligation. Number 15. A cooperative bank if it pays any interest on deposits other than time deposits, to residents, then there is no TDS obligation. Interest on deposits other than time deposits. Number 16, if a cooperative society pays interest to non-members it may be any interest. If that interest doesn't cross 5,000, there is no TDS obligation. There is no TDS obligation. Number 17. Number 17. Offshore banking units it accepts deposits or borrows from residents, or it accepts deposits from residents on that if it is paying any interest. Offshore banking units located in SEZ, if they pay any interest, on that there is no TDS obligation. This is as per which section? This is as per section 197A subsection 1D. Then there is one more point. Self-declaration through Form 15H, 15G, through Form 15H, 15G. Section 197A payee is a senior citizen is a non-senior citizen payment is interest on securities or interest other than interest on securities interest on securities or interest not being interest on securities. Listen to me. This payee can issue Form 15H Form 15H to the payer to avoid TDS under 193 or 194A, can issue Form 15H to avoid TDS under 193 or 194A. Similarly, this non-senior citizen can issue to the payer Form 15G to avoid TDS under 193 or 194A, to avoid TDS under section 194 or 193 or 194A. (15G, 15H). Conditions for issuing Form 15G. Interest supra doesn't cross the basic exemption limit. Estimated total income doesn't cross basic exemption limit. Possesses PAN. Then 15G could be issued. Conditions for issuing Form 15H. Conditions for issuing Form 15H. Interest supra interest illa total income estimated total income doesn't cross basic exemption limit, and he possesses PAN. Possesses PAN. That way you need to understand. With this, we are through with section 194A. Next is 194B. TDS on winnings from lotteries. Winnings from lotteries, etc. TDS on winnings from lotteries, etc., where the payment is winnings from lottery, crossword puzzle, card games, or games of any other sort. Including game shows, entertainment programs, on TV or electronic mode, winnings from lottery, crossword puzzles, card games, games of any sort, including this. This is the payment. The payee may be resident or a non-resident. And the payment is crossing 10,000 threshold limit, 10,000. Then the payer has TDS obligation at the time of payment. The TDS obligation is at the time of payment. The TDS rate is 30%. The TDS rate is 30%. There is a proviso below 194B there is a proviso below section 194B. Winning supra is wholly in kind or it is partly in kind and partly in cash. It is partly in kind and partly in cash. And cash component is not sufficient to cover TDS. The cash component is not sufficient to cover TDS. In the situation like this, the payer shall release the winnings only after ensuring that the tax on the winnings supra is paid. In the situation supra, the payer shall release the winnings only after ensuring that tax on the winnings supra is paid. With this, we are through with section 194B. Section 194BB. TDS on winnings from horse races. From winnings from horse races. The payment is winnings from horse races and the payee could be anybody, could be resident or non-resident. The payee could be resident or non-resident. Payer will be bookmaker or a person licensed by government for racing in race courses. And the payment is crossing 10,000. Then such person has TDS obligation at the time of payment. The TDS rate is 30%. The TDS rate is 30%. The TDS rate is 30%. With this, we are through with section 194BB. Next is section 194C. Section 194C. TDS on payment to contractors. Payment to contractors or subcontractors. TDS on payment to contractors or subcontractors. Payment is sum for carrying out work or for supplying labor for carrying out work. Sum for carrying out work or sum for supplying labor for carrying out work. The payee is a resident contractor or subcontractor. Okay. And the payment is made pursuant to a contract the payment is made pursuant to a contract. Payer could be any person. So the payment is what? Sum for carrying out work or for supplying labor for carrying out work made pursuant to a contract. To whom? To a resident, contractor or subcontractor. The contract includes subcontract. Subcontract. Then this payer has TDS obligation. And this payer has TDS obligation. The payer has TDS obligation. There, first point, TDS rate, it all depends upon the status of the payee. Payee is individual or HUF. Payee is any other person. Payee is individual or HUF. Payee is any other person. If the payee is individual or HUF, the TDS rate is 1%. subject to 206 AA. No PAN means 20%. The TDS rate is 2%. Once again, this is also subject to 206 AA. This is regarding the TDS rate. Timing of TDS at the time of payment or the time of credit, whichever is earlier. At the time of payment or the time of credit, whichever is earlier. This is regarding the timing of TDS. Sorry. Now there is one more point you need to understand. Note, if the payer is individual or HUF or AOP or BOI, not liable to tax audit in the immediately preceding financial year. Not liable to tax audit in the immediately preceding financial year. Then not liable to tax audit in the immediately preceding financial year. Then that payer has no TDS obligation. Under section 194C. Such payer has no TDS obligation under section 194C. These are the things you need to note. This is note number 1. Then you should know meaning of the term work. The term work includes, actually it includes so many things which are not actually work. Fiction is created to expand the scope of the section. The term work includes connector A, I am continuing. Work includes advertising, work includes what? Advertising. Broadcasting and telecasting. Production of programs for broadcasting and telecasting. For broadcasting and telecasting. carriage of goods or passengers by any mode of transport other than railways. Carriage of goods or passengers by any mode of transport other than railways. Carriage of goods or passengers by any mode of transport other than railways. Next is catering. Last, manufacturing or supplying a product according to the requirement or specification of a customer by using the material purchased from him, by using the material purchased from such customer. So, fiction is created to include so many things which are not work. What are those which are included in work definition fictionally? Let me go through again. Advertising, broadcasting and telecasting, production of program for broadcasting and telecasting, carriage of goods or passengers by any mode of transport other than railways, catering, manufacturing or supplying a product according to the requirement or specification of a customer by using the material purchased from such customer. So this is how the term work is defined. In fact, the scope of the term work is expanded. These are all not work. Now, there is threshold limit. Threshold limit. Where payment to contractor made at one point of time doesn't cross 30,000, where payment to a contractor made at one point of time doesn't cross 30,000 and where the aggregate of sum paid are likely to be paid credited likely to be credited to the account of contractor during the previous year doesn't cross 1 lakh, where the sum paid are likely to be paid or credited or likely to be credited to the account of the contractor during the previous year doesn't cross 1 lakh, where payment to the contractor made at one point of time doesn't cross 30,000 cumulative. Then the payer has no TDS obligation. The payer has no TDS obligation. Payer has no TDS obligation under 194C, under section 194C. Where the payment to the contractor or sum to be credited to the account of contractor where the payment to the contractor or sum to be credited to the account of contractor at one point of time doesn't cross 30,000, and where the aggregate of sum paid are likely to be paid or credited or likely to be paid to the account of the contractor during the previous year doesn't cross 1 lakh, then the payer has no TDS obligation. We will have an illustration for this for understanding the threshold limit. See this, case 1. X Limited to contractor A makes a payment pursuant to contract 1, makes a payment to contractor A. And the amount paid is 50,000. The date of payment is 14th June 2019. X Limited, this contractor is an individual, has TDS obligation at the rate of 1% under 194C. Under 194C has TDS obligation. Then case 2, X Limited has entered into a contract with contractor B say we will call it as contract 2 with contractor B. Sum payable pursuant to the contract is rupees 1,20,000. 1,20,000. $30,000 paid on 18th June. 30,000 paid on 20th June. Another 30,000 paid on 22nd June. Another 30,000 paid on 24th June. Though payment on one occasion has not crossed 30,000, the aggregate amount of sum paid or likely to be paid has crossed 1 lakh. It has crossed 1 lakh. Now, this X limited as TDS obligation at the rate of 1% because this contractor B is also an individual. Under 194C, as TDS obligation under 194C. So this is an illustration for understanding the threshold limit. Next is section. This threshold limit is given in section 194C subsection 5. Now we are going to discuss 194C subsection 3. Customer, contractor. Between them there is a contract. Pursuant to that, the customer sells material to the contractor. Then the contractor manufactures product according to the requirement of customer using material purchased from him, using material purchased from him, and the contractor thereafter supplies the product to the customer. The customer is making payment. The customer is making payment, and the customer has TDS obligation under 194C. The customer has TDS obligation under 194C. But on what amount tax is to be deducted at source? On what amount the customer has to deduct tax at source? Deduct tax at source. On what amount the customer has to deduct tax at source? On what amount? Here there are two situations. Invoice raised by contractor mentions the value of materials purchased from the customer. Purchase from the customer separately in the invoice. Mentions the value of materials purchased from the customer separately in the invoice. Doesn't mention the value of materials purchased separately. Okay, where it mentions separately, amount is invoice value minus value of such material invoice value minus the value of such material doesn't mention the value of material separately. The amount is the amount on which tax is to be deducted at source is the invoice value. Is the invoice value. So this you need to understand. This is given in 194C subsection 3. Then section 194C subsection 4. What is 194C subsection 4? Sum paid or credited to the contractor some are paid or credited to the contractor where the payer is individual or HUF and the sum paid or credited to the contractor for carrying out a work. Sum paid or credited for carrying out work is exclusively for personal purpose. Is exclusively for personal purpose of such individual or HF. Then the payer has no TDS obligation. The payer has no TDS obligation. Under 194C, where the payment is exclusively for personal purpose, there is no TDS obligation. For example, Mr. X, a leading advocate with roaring practice, is getting his daughter married. On the occasion of marriage reception, food is to be provided to the persons coming to the reception. So catering services are availed from a catering organization. To the catering organization, money is paid. Okay, this is a payment for carrying out work, but it is for exclusively for personal purpose. So therefore, there is no need to deduct tax at source. There is no need to deduct tax at source. Where the payer is individual or HUF and the sum paid or credited is for carrying out a work, okay, exclusively for personal purpose. The payment is made to the contractor, then there is no TDS obligation. 194C subsection 5, 6. 194C subsection 6. Payment is made to a contractor payment is made to a contractor This payment is made for carriage of goods. And the contractor is in the business of plying, hiring, or leasing goods carriages. Is in the business of carriage of goods carriages, plying, hiring, or leasing goods carriages. Payer has no TDS obligations under 194C if the following conditions are fulfilled. The following conditions are fulfilled. Has no TDS obligation under 194C if the following conditions are fulfilled. What conditions? Number 1, condition number 1, contractor doesn't own more than 10 vehicles at any time during the previous year. Contractor doesn't own more than 10 vehicles at any time during the previous year. He makes a declaration to this effect to the payer. He furnishes his PAN to the payer. He furnishes his PAN to the payer. Then there is no TDS obligation. With this, we have completed section 194C. Next section for discussion is 194D. 194D. Section 194D. TDS on insurance commission. TDS on insurance commission. Insurance companies payer ಯಾರು insurance company. Payee is a resident insurance agent. Payee is a resident insurance agent. Payment is commission. For assisting in procuring insurance business. Procuring insurance business. This is the payment. And if this payment is crossing 15,000 threshold limit, the payer has TDS obligation under 194D. The TDS rate %5 subject to 206 AA, no PAN 20%. Timing of TDS at the time of payment or at the time of credit to the account of the payee in the books of accounts of the payer, whichever is earlier. Whichever is earlier. Note: payee can avoid TDS under 194D by making self-declaration in form 15G or 15H. This we have already discussed in the context of interest, similar. 15G for non-senior citizen, H for senior citizen. Conditions are same. That is in the context of interest. Now it will be in the context of commission. Next is section 94DA, D is over. 94DA. TDS on payment in respect of life insurance policy. TDS on payment in respect of life insurance policy. Life insurance policy. Payer is insurance company payee is a resident the payment is sum payable under life insurance policy, LIP na life insurance policy, including sum allocated by way of bonus sum payable under life insurance policy including sum allocated by way of bonus which is not exempt under 1010D, which is not exempt under 1010D, and which is not exempt under 1010D, and which is greater than or is equal to rupees 1 lakh, which is greater than or is equal to rupees 1 lakh. Then the payer insurance company is having TDS obligation. Has TDS obligation under 194 DA when at the time of payment has TDS obligation at the time of payment. What is the TDS rate? What is the TDS rate? Date of payment is before first September 2019. This is on or after 1st September 2019. Before 1st September, on or after 1st September, then the TDS rate is 1% on sum paid Here it is 5% on income component in the sum paid, not in the entire sum paid, it is only on the income component on the sum paid, 5%. This is regarding the TDS rate. Note, payee can avoid TDS under 194 DA through self-declaration in Form 15G for non-senior citizen, H for senior citizens. Now, this section itself will come only when the sum is not exempt under 1010 DA. So, incidentally, let us discuss provisions of section 1010 DA. 1010 DA, 1010 D. 1010 D. No exemption. This section exempts sum received under life insurance policy, including sum allocated by way of bonus, exempts sum received under life insurance policy, including sum allocated by way of bonus. However, no exemption shall be allowed in respect of the following: no exemption shall be allowed in respect of the following: no exemption. Number 1, Keyman insurance policy proceeds. This is very much taxable. Next is sum received under 80 DD subsection 3. This I have already discussed in chapter 6A. We will not do duplication. You can refer that. Next is life insurance policy proceeds where the annual premium exceeds specified percentage of sum assured. where the annual premium exceeds the specified percentage of sum assured. These are all not exempt under 1010D. These are not exempt under 1010D. Now, note 1. What is that specified percentage of sum assured? Specified percentage of sum assured. What is that? Space is not there, connector. A date of issue of policy. Is before 1st April 2012, then the specified percentage is 20%. It is on or after 1st April 2012, before 1st April 2013. The specified percentage is 10%. On or after 1st April 2013. 1st April 2013. Insured suffers from disability referred to in 80U or suffers from disease or ailment referred to in Rule 11DD. Referred to in Rule 11DD. Is 15%. Insured being others, then the percentage is same 10%. This is specified percentage of sum assured. Note number 2. Life insurance policy proceeds payable upon death of insured is exempt under 1010D. There is no doubt. It is exempt under 1010D, and that will not come under 194DA. 194DA. These are all the things you need to remember. Section 194G. This deals with TDS on commission etc. on sale of lottery ticket tickets. இங்க பேயி யாரு? is lottery agent. He may be resident or he may be a non-resident. That is not an issue. Payee is a lottery agent. Payer is Directorate of Lottery. And the payment is commission or remuneration for sale of lottery tickets. For sale of lottery tickets. And if this payment is crossing 15,000, then the lottery agent, Directorate of Lottery, has TDS obligation under 194G. Under 194G. The TDS rate here is 5%. Timing of TDS as usual at the time of payment or the time of credit. At the time of payment or the time of credit, whichever is earlier. Whichever is earlier. This is regarding the TDS rate and timing of TDS. Next is section 194H. TDS on commissioner brokerage. Payee is an agent who is a resident, who should be a resident. And the payment is commission or brokerage. Commission or brokerage not being one covered by 194D or 194G, not being one which is covered by the aforesaid sections. Listen, this is the payment made by the payer, who could be any person, any person. And this amount is crossing 15,000, is crossing 15,000. Then the payer has TDS obligation the payer has TDS obligation. Now, what is the TDS rate? Is 5%. Timing of TDS at the time of payment or the time of credit, whichever is earlier. The time of payment or the time of credit to the account of the payee in the books of accounts of the payer, whichever is earlier. This is regarding the timing of TDS. Now listen to me. Note 1. Payer is individual or HUF. And that payer is not liable to tax audit, not liable to tax audit in the immediately preceding previous year, not liable to tax audit in the immediately preceding previous year. Then such payer has no TDS obligation under 194H. No TDS obligation under section 194H. There is no TDS obligation. This is point number 1. No TDS obligation on commission to the share broker are underwriters. Two share brokers are underwriters. This is specifically given in the section. There is no TDS obligation. Key for entry into 194H is principal agent relationship between the payer and payee. Key for entry into section 194H is the existence of principal agent relationship between the payer and payee. If it is missing, we cannot enter into 194H. With this, we are through with 194H. Then we enter into 194I. What is 194I? TDS on rent. TDS on rent. இங்கே payee is a resident. Payee is a resident. Payer is any person and the payment is rent. Payment is rent. Correct now? And the rent amount, the aggregate amount of rent is crossing the threshold limit of 2,40,000. The aggregate amount of rent crosses the threshold limit of 2,40,000. Then the payer has TDS obligation under 194I. He has TDS obligation under which section? 194I. The TDS rate depends upon the payment. Space is not there, connector. We will complete this timing of TDS. That is as usual. At the time of payment or the time of credit to the account of the payee in the books of accounts of the payer, whichever is earlier. At the time of payment or the time of credit to the account of the payee in the books of accounts of the payer, whichever is earlier. The TDS rate you need to know. Payment is for use of land or building or furniture or fittings. It is for use of plant, machinery or equipment. Plant, machinery or equipment. In such case, the TDS rate is 10%. For use of plant, machinery or equipment, then it is 2%. Then note 1. Payer is individual or HUF. The payer is individual or HUF. The payer is not liable to tax audit in the immediately preceding financial year. Not liable to tax audit in the immediately preceding financial year. Not liable to tax audit in the immediately preceding financial year. No TDS obligation under section 194I. Note number 2. Rent means payment for use of land, building, plant, machinery or equipment or furniture or fittings. under lease, sublease or tenancy or any other arrangement. This is how the term rent is to be understood. So this is meaning of the term rent. Next is there are some points requiring attention. Landlord, tenant. From the landlord, the tenant gets not only rent and also collects GST if it is for letting out commercial space. TDS shall be only on the rent component, shall be only on the rent component. CBDT circular 23/2017. The TDS shall be only on the rent component. Note number 4. Airline companies, they pay landing and parking fee to Airport Authority of India, AAI, Airport Authority of India. This is not a rent. Therefore, they have no TDS obligation under 194I. They have no TDS obligation. Under 194I, no TDS obligation. Note number 5. This is based on the judgment of Supreme Court in Japan Airlines. Next is lessor, lessee pays lease rental shall be subjected to TDS under 194I because this is rent. But the lessee pays pays lease premium at the inception of lease. This lease premium is not a rent. On this, no TDS under 194I. This is a sum paid for securing leasehold interest in the property. This is for securing leasehold interest in the property. Leasehold interest in the property. So this you need to understand. This is 194I. Next is, even in 194C, there is one more point is there. Payer to the contractor pays sum for carrying out work plus GST is also paid to the contractor. No TDS on GST component. No TDS on GST component. This is CBDT circular 1/2014. 1/2014. Next is section 194 LA. LA. Immovable property not being agricultural land not being agricultural land, maybe rural, maybe urban, not being agricultural land is compulsorily acquired under Land Acquisition Act 1894. Pursuant to this, compensation or additional compensation compensation or additional compensation, payment is compensation, additional compensation. Payer is land acquisition officer. Payee is a resident from whom it was compulsorily acquired, resident. And this compensation aggregate amount received during the financial year exceeds 2.5 lakhs. Exceeds 2,50,000. Then the payer has, land acquisition officer has TDS obligation at the time of payment. Has TDS obligation at the time of payment. The TDS rate is 10% subject to 206 AA. No PAN 20%. This is 194 LA. Note, compensation is received under right to fair compensation and transparency in Land Acquisition and Rehabilitation and Resettlement Act 2013. This is exempt under 96 of the Act Supra. Therefore, this shall not be subjected to TDS under 194 LA. Therefore, this shall not be subjected to TDS under section 194 LA. So this you need to understand. This is 194 LA. Next is section 194 IA. TDS on payments on transfer of certain immovable properties. TDS on payments upon transfer of certain immovable properties. TDS on payment upon transfer of certain immovable properties. Here, payee is a resident Payer is any person pay is the transferor. He transfers an immovable property. Pay is the transferee. Payee transfers an immovable property. Transfers an immovable property not being rural agricultural land. Agricultural land illa. Rural agricultural land. He transfers it. This transfer is not by way of compulsory acquisition. If it is compulsory acquisition, then 194 LA. Not by way of compulsory acquisition. Now the consideration paid for this transfer is greater than or is equal to 50 lakhs. Greater than or is equal to 50 lakhs. Then the payer has TDS obligation under 194 IA has TDS obligation. Okay. TDS obligation now, what is the TDS rate? The TDS rate is 1%. However, subject to 206 AA, no PAN, 20%. Timing of TDS at the time of payment or the time of credit to the account of the payee, whichever is earlier. At the time of payment or the time of credit to the account of the payee in the books of the payer, whichever is earlier. This you need to understand. Now, note 1. Consideration supra shall include charges of nature, of club membership fee, car parking fee, Electricity and water facility fee. Electricity and water facility fee. Maintenance fee. Other charges of similar nature which are incidental to transfer of immovable property. Transfer of immovable property. So we are comparing the consideration with 50 lakhs. Now, if the consideration includes these elements, you should not exclude them. You should let them included there only, and then compare with 50 lakhs. After excluding them, it may fall below 50 lakhs, but the TDS obligation, okay, doesn't go, it is there. Note number 2. Payer and the payee can be investor or dealer, it doesn't matter. Still the section applies, investor or dealer. Next is for deducting tax at source under 194 IA, tax deduction and collection account number not necessary. TAN is not necessary. PAN is sufficient for the payer. If he is having PAN, he can deduct tax at source. TAN is not required. Note number 4. The tax deducted at source under 194 IA shall be remitted within 30th of the next month. Time limit for remittance. For remittance of TDS under 194 IA, it is 30th of the month succeeding the month of tax deduction. It is 30th of the month, 30th of the month succeeding the month of tax deduction. Thirtieth of the month succeeding the month of tax deduction. Next is note number 5. Rupees 50 lakhs threshold limit in this section. is to be compared with the actual consideration and not with stamp duty value. Not with stamp duty value. They should be compared with note number 6. If the transferor is a non-resident, payments to him are not covered by section 194IA but by section 195. But by section 195. So these are all the points you need to keep in mind in 194IA. The next section is section 194IC. You should go to Capital Gains chapter, recollect 45(5), a joint development agreement. Pursuant to joint development agreement JDA, if the dealer makes payment of a sum if the dealer or developer makes payment of a sum to the owner then that comes under 194 IC. Is the payer, owner is the payee. This owner should be a resident. Makes payment of a sum. There is no threshold limit given. Then the developer has TDS obligation under 194 IC. Under which section? 194 IC. Okay. TDS obligation is there, correct. But at what rate? The TDS rate is 10%. However, it is subject to 206 AA, same story everywhere. No PAN to the payee, then 20%. Timing of TDS, that is also same story. At the time of payment or the time of credit to the account of the payee in the books of accounts of the payer, whichever is earlier. With this, section 194 IC is also over. 194 IC is over. So the next section which we shall discuss here is 194 IB. 194 IB. We will discuss this after a break.